Let's wait for Ali. I think he may join at any time. Just wait for him so that we can continue to clarify his entries. Let us continue. I think he may join at any time because I've turned off the waiting room. Let us continue. So this entry was the entry that gave us an opportunity to go down before we can go up. And as you can see on 1 hour time frame, we had this liquidity engineering because that was the daily time frame. We had this Wyckoff schematic, or we call it liquidity inducement. The market reacted for the first time, for the second time, the market came and engineered our liquidity, as you can see. Then after the market came, after refining a lot, we had this liquidity engineering on 15 minutes was the last liquidity engineering that we had for that specific time. The market came and tapped that entry, but even if you missed that first entry, just don't panic. Wait for the market to confirm another entry so that you can ride that trend. So now that was our second entry, as you can see. Even if you missed that second entry, you can also take another third entry, as you can see on that specific liquidity engineering that right there. You had that entry, so you can continue to go down with the price. Risk was almost 7 pips. So if you maybe you were aware now of this set of liquidity, you can actually sell on this specific point here. Then take your take profits on that specific type 1 that I actually mentioned on above. You can take this buy trade. As you can see there, the market now went up. Another example, we had this one, type 1, it was on 4 hours. When we come to 30 minutes time frame for refinement, now there is this situation. You can find a situation that you have this 5 minutes liquidity engineering point, and also on that specific point, you have also another type 1, maybe on 30 minutes time frame. Now, actually, after doing a lot of examples, a lot of backtesting and forward testing, what actually happens on this situation? Sometimes the market may come, but won't reach to this area. May come and maybe do some stuff on this area, then the market goes down. So, what conclusion that on what do we have to do on this specific scenario? We have to use supply and demand. Actually, we have to mark this candle as our entry point on some specific scenarios also. But sometime also, you may come and refine now on this specific type 1 rather than continue to holding on this liquidity engineering, on this previous liquidity engineering. So if situation like that happens on your first situational time frame, that is maybe 30 minutes or 1 hour time frame when you are refining, that first situational time frame that you actually go to refine and find situation like this, actually you have to use this specific point so that you can refine it so that you can take that highest probability entry. But on that point, the market came and tapped that specific point. Now, let me ask you a question. Have you ever heard anything about what we call banker block?
Banker block, no.
Yes, banker block. Actually, this is the type of candle that if you see it, actually you cannot identify if it is a bearish candle or bullish candle. Even if you zoom this chart, even if you expand this chart, you cannot see if that candle is specific bearish candle or specific bullish candle. You cannot be able to see that. So now, how we trade these candles? The candles actually, it is like this. We actually mark on specific body. I mean that exact point right here on that specific. We mark this entry point that there. Then after we can take your risk based on the confirmation entry of another trade that actually has already happened. For example, as you can see on this example, this was my banker block. It is a candle that even if you zoom, you can't even know if it is a bearish or bullish. Now we mark this candle on that specific body. Then after the market comes, taps to that entry point, then the market goes. These these banker blocks, actually they don't happen often. But if you happen to spot it, actually you are having a highest probability of winning that trade. So the first entry had almost 6 pips stop loss, the second one only 4 pips, and the reward was almost 1:45. So for the both entries, it was almost 1:90. Capitalize. Another example, we have this card CHF. We have this type 1 on 4 hours time frame. If we come to refine it, as you can see here, we have the special case liquidity flip. The market try to engineer liquidity, as you can see here, but this liquidity engineering was incomplete. Now the market came down and went down with a lot of momentum. So at this, now then the market came tapped to that specific point, as you can see, almost more than twice. Then the market now went, and here the risk was almost 1 pip, only 1 pip. But remember, the broker won't allow you to put a 1 pip trade. So you might also have to maybe modify your trade by maybe allowing almost 3 pips, maybe, or 4 pips. But the broker won't allow you to put almost 1.6 pips stop loss on any of the trades because of maybe some spreads, maybe some slippages, and so forth. So the market went almost 268 pips, a result of only one ratio, 167. Enough to capitalize. Another example, we have this type 1 on daily time frame. As you can see, the market closed below, the market reacted above. On daily time frame, I mean on 1 hour time frame, we had this liquidity engineering. On 1 hour, it was something like this on 1 hour. But after refining this entry, on 15 minutes, we have this liquidity engineering. Then after, on 15 minutes, the market came in, tapped to that specific point, as you can see here. But even if you miss that first entry, you can actually take the second entry by confirmation, as you can see on that specific point. The market came, tapped to that entry point there. Then the market went down. But if we discuss shift on maybe, I think it was on the fifth agglomeration, we will actually talk about how to take trades based on this specific level. Yeah. So now the market almost went down 290 pips. Another example at this card APY, we have this type 1 on 4 hours time frame. As you can see, the market closed below, the market reacted above this point here. We have this validation point, we have this invalidation point on that specific bearish candle. Now, if we come for refinement on maybe 30 minutes time frame, this was my last liquidity running based on 5 minutes time frame. As you can see, actually we spotted on that specific entry. The market came tapped that specific entry, as you can see there. Then the market moved almost 297 pips. This is actually for intraday perspective, because the constant time frame was 4 hours time frame. So it's a trade that you take maybe some 200 pips, maybe 150, maybe 300, so on. Then you capitalize.
Which time frame do you use mostly as your constant time frame?
As a constant time frame, now that depends on actually how the market conditions are. Because if I find the market maybe it has formed for me an area of liquidity, maybe monthly area of liquidity. On phase 2, when we discuss phase 2, I will tell you on what to look so that the market may come, so that you can know if the market is now going to this specific area for consuming this liquidity. So now, if you continue this cycle to the lower time frames, to the lower time frame, to the lower time frame, now you can understand each and every trend on each and every specific time frame. Now you can know on how to take advantage of this movement. You can actually maybe, because the market are confusing, you can find out that the monthly time frame tells you that the market is going up. But also, if you come to these specific levels of monthly, on this specific level here, you can find daily is doing what? It's going down. So as we know now, monthly is going up, and we have to follow the trend. We have to follow the highest time frame buyers, I mean. So on this scenario here, you can find that now daily is going down. So some people actually are getting confused. Daily is going down, monthly is going up. What do I have to do? But we will discuss, and I will tell you on what to look first. So if you now this is monthly, this is daily time frame, but also on this specific daily time frame, on these levels here, levels like this one, you can find now 1 hour time frame is actually doing what? Going up on this specific level. So now an individual may get confused now. What do I do? Monthly is going up, daily is going down, 1 hour time frame is going up. What do I have to do on this specific criteria? All of this stuff we will discuss them on phase 2, and everything will be cleared and everything will make sense. So now this entry almost gave us that 297 pips. Another example where this CHF-JPY, it was on monthly time frame. Type 1, market closed below, market reacted above, as you can see. On refining this entry, we had this liquidity engineering. The market came, tapped that, and this was the entry with 0 drawdown, as you can see. The market came, tapped that specific entry, then the market now moved to that specific direction, almost 565 pips. The risk was only 14 pips, but on this situation, even if you put 5 pips, actually you are safe. The market goes to that specific direction. Another example where this HF-JPY was type 1 on daily time frame. On 1 hour time frame, we had this liquidity engineering, and it was very best because it was liquidity engineering with some liquidity inducement concepts. The market reacted again, then the market went up, then went down again, as you can see. Now the market came, tapped that specific entry point. But if you observe clearly, before the market start to go down, you can observe on these specific candles that I'm actually illustrating right now, the market formed another type 1 because the market above, the market closed below. So if you go on maybe 15 minutes time frame and refine this specific candles, you can find out that you can also take another trade from this point maybe to this point right here. So you can actually, based on that conditions. Now the market went down, as you can see, almost 262 pips. But this movement, this downward movement, was stopped out by the another movement of type 1 entry that I'm going to discuss it below. That gave us this entry, this buying entry on this specific point. Now let us go and look at what kind of movement that the market did. It was this type 1 that was on from 4 hours time frame. Now if we refine it, you can see this was my liquidity engineering. After going to 30 minutes time frame refinement, the market came and tapped to that exact point. So now as you can see, as above so below, the market, we had this type 1 entry, that market come down, to this exact point, as you can see here. Then after now, the market goes up. So whether to hold this trade or not to hold, you have to observe on higher time frames so that you can know if you have to hold this selling trade or you have to hold this buying trade. But also sometimes I personally am getting confused because sometimes you may enter a selling trade, as you can, maybe something like this, the selling trade is going down. Then after you enter another buy trade. Now the market is at the middle. You don't know to close the sell position, you don't know to close the buy position. But this now the market, after observing the higher time frames or the two directional wise of the market, you can know what to close or what to take partial and what to continue to hold. So as you can see, this trade actually went almost 1,900 pips, and the risk was only 9 pips. So it was almost 1:100. It depends on how you hold that trade and so on. Another example, we have this euro out. It was type 1. And last week I traded euro out also. It was also a type 1. It was based on 4 hours, if not daily. We had this weekly time frame. On 4 hours time frame, we had this one, liquidity engineering, as you can see. Then the market came, tapped to this point here. Then after the market, but there's also this concept that I actually talked it to Ali on his assessment. I was also planning to talk it to you also on that assessment, but I may even clarify it on this example. Sometime when the market form this area of liquidity, maybe on maybe 4 hours time frame, or maybe 1 week time frame. If you come to the 4 hours time frame now, maybe let me illustrate. Maybe this point was my area of liquidity. If you come to the 4 hours time frame and you find that the market is doing some things like this. Or the market does maybe something like this. Then it goes to that specific direction. Maybe this was your validation point and this was your invalidation point. Maybe this was your, maybe this, yeah, something like maybe this was your validation point or this was your invalidation point. Actually, what happens, as we know, the market is a slave to liquidity. The market must also go, the market is fractal actually. So what happens to monthly time frame, it is also what is happening to those to 1 minute time frame. That's why I actually tell people that don't put this 1 minute time frame or 5 minutes time frame areas of liquidity into contempt, because there it is where the movement, the actual movement originates from. So as you can see on these examples, that on this illustration that I've done, the market was forming some areas of liquidity. Then after, the market comes down and consumes them, as you can see. Then after, the market forms another area of liquidity, as you can see here. Then the market comes and consumes it again. Then the market forms another area of liquidity, as you can see. Then also the market comes again and consumes it. So if your area of liquidity, and this is done on situational time frames, but on constant time frame, you can see just something like this on constant time frame. But if now you come deep, you see something like this on your situational time frame, the market, it has higher probability of not returning to this area of liquidity, or the market may come to return to take this pure bullish on this specific retest right here. Then the market now moves to that direction, because there is no enough liquidity to pull this price to come down, because all of liquidity has already been taken from this exact point. Are we together? Maybe if there's any question on that concept.
I need to look at it again.
Of course. Now, if you see this example, let me illustrate. If you see this example, as you can see here, we had also some sort of this one. The market tried to consume liquidity. Now, as you can see on this example also, the market came and did what? Consume this area of liquidity. So if situation like this happens, you have to use your liquidity engineering. And if there is no any liquidity engineering, then don't use that zone as your area of liquidity. So as long as we have this liquidity engineering, and this concept, we will discuss it on, I think it is in the maybe the third, if not the fourth agglomeration. So the market comes to that liquidity engineering entry point there, then the market taps that liquidity engineering point, then the market now moves to the true direction, and the market moves almost 3,885 pips, almost 1 ratio, 313. Risk was only 12 pips, as you can see. Another example, Euro AUD, we had this one type 1, it was daily time frame. On 1 hour time frame, we had this liquidity flip, as you can see. If you spoil liquidity engineering and you spoil liquidity flip at the same time, you have to use liquidity flip, because the base bearish setup are the failed bullish setups. So now the market came, but didn't reach to that exact point on this specific saver. This is Rwanda. But if you go to another savers, this entry was taken. As you know, these brokers actually do some discrepancies, and this specific candle, this MetaTrader, some manipulations. But that's not the case. That's not the case. After the market didn't actually reach that specific point, the market also formed another type 1 beneath that area, as you can see on this candles that are actually highlighted there. So on this specific point, the market now, the risk is very, very small. So if you manage to refine that entry, you can get some entry also. But even if you just mark this liquidity engineering on 1 hour time frame, you're actually safe. Even if you put some 15 pips stop loss, you're also safe. The market came and tapped that specific point. And as you can see on these weeks that actually were trying to come up for an individual that maybe refined his entry on these specific candles. Yes, now this was the one that maybe can take that sniper's entry of them all. That entry that was maybe found on this specific point. That individual could also take that entry after refining that type 1. candles. So the market now went down almost 1,885 pips, almost 146. So you can decide for yourself if you want to become a swinger or you want to become an intraday, but we'll discuss it now deeper on phase because this phase one, if you have noticed, is actually we are dealing with those continuational movements. Those continuational movements is what we are actually dealing with. But now on phase two, now we will come and look on what now if the market does something like this, what do we have to do? Because the market won't drop forever, won't create these validations and invalidations forever. The market may come and close above or close. The market may come and close above that previous validation point or invalidation point, as you can see here, for example. Now we will come and discuss on what to do if the market does something like this. What do we actually have to take into consideration? We'll discuss it on phase two. So the market almost did that. So we have another example, Euro AUD. We have this type 1 entry. The market closed below this point. Also reacted above, as you can see on that specific point right there. Then after the market, we had this liquidity engineering, but as you can see, the fathomless deviation was very, very far, as you can see. But also we were backed up by some liquidity inducement that were actually happening on this exact point. So now this is the main reason that can make you to take this trade on this specific area, though it was very risky because the structure it almost had, I think it was, or maybe I think it was 40 to 50 pips. But as I told before, if you spot some conditions that favor you on this scenario, you have to only use 15 pips. You're actually safe. And if the market comes and taps you or stops you out by 15 pips, then that means you were actually wrong on that specific trade. As you can see, the market came, tapped to that specific point. It was a zero drawdown entry. Then the market moved to that specific direction by almost 620 pips, and the risk was only 6 pips. Another example, we had this one, type 1, it was 4 hours time frame. On 30 minutes time frame, you can see we had this liquidity engineering. But if we go now to refine this entry, we had this 5 minutes liquidity engineering, as you can see, very clean. Also, it was liquidity, it was a result of liquidity inducement. The market was actually reacting to this level, reacting and reacting. Then the market came in, goes above and then it goes below, as you can see. Now the market came and tapped that specific point. Then now we went to that direction. Risk was only 4 pips. Reward was almost 226 pips, so almost 156. Enough to capitalize. Another example, we had this type 1, it was a weekly time frame, as you can see at the market reacted above that point. Also, when we come to refine this entry, we had this liquidity engineering, also liquidity inducement, because the market reacted for the first time, reacted for the second time, after the market came in, and general liquidity. As you can see, the market came, tapped that specific point. Now, some things also that you have to take it into consideration. After the market takes your entry, don't rush to put into break-evens. You have to observe if maybe that previous structures that you were having, you have to make sure that the market closes below those structures. But this concept we'll discuss it on phase 2. Now, maybe if you took this trade, this first trade right here, you have to observe if the market closes below this point. If the market doesn't close below this point, sometimes the market may come and take another entry, as you can see that the market now goes to. So now, if you put your break-evens, if you put early, you rush to put your break-evens on this exact point, the market may come and stop you out. Then after it goes to specific direction, something that is not good. So the market now went down almost 550 pips, as you can see. Now the risk was almost 7 pips. Another example of this Euros HF, but this type 1, it was daily time frame. On 1 hour time frame, now look, something that I was talking about on previous explanations, we have this liquidity flip, as you can see, but also on the exact point, we have this type 1 on 1 hour time frame. Now, if you don't want to miss your move, it's better to use supply and demand. You can actually, for those who maybe didn't or don't know about supply and demand, you actually mark that previous candle before the downward movement for the selling scenario, or the previous bullish or the previous bearish candle before the upward movement. So now we are marking this candle here on the body part. Your stop loss may be on somewhere, maybe here, but on these conditions also, another option that I can give you, you can actually put 2 trades. One trade you can put on this exact point here. The stop loss that you'll actually take for this first entry, it must be based on the liquidity engineering that you will find on this specific situational time frame. Maybe it is maybe somewhere here. So your first entry will be from this point here to the risk of maybe this point here. The second entry will put from this point here to maybe above that furthermost deviation. That's the trick that I'm actually using. But if you put your entry to the supply zone, you are actually sure that the market will come and trigger your entries so that you don't miss your move. As you can see, the market came, tapped that first entry there, then the market now moves to that specific direction of the market, almost 1,410 pips. The risk was only 3 pips. So you can imagine what kind of low size you can put on situations like this. Huge low sizes, actually. So another example, we have this Euro CHF, where this type, when the market was going down, as you can see, the market created a validation point and a validation point. Also, the market reacted above, the market closed below. This is what we call type 1. When you come to 30 minutes time frame, this was my liquidity engineering, clean liquidity engineering. The market came, tapped to my engineering, as you can see right there. Then the market now went to that specific direction. But also, if you go to 5 minutes time frame, we have some confirmation entry. Now, this is where Indomitable comes into play. Get this confirmation entry where we took this second trade. But also, as you can see, even if you miss those 2 trades, you can also take this trade on, as you can see on that liquidity engineering, that the market actually printed on that specific area. Now the market moves to, as you can see, that was the third entry. The market now goes to that specific trade, and each and every trade offered almost 487 pips, almost 1:62. As you can see, that was my third entry, 470 pips, enough to capitalize. Also, we had this type 1 to 0 GBP first time frame. On 30 minutes time frame, we had this it was on 5 minutes time frame because the entry was refined. But after refining that entry, we also found out that the candle that was available on this exact point here, it was a result of liquidity inducement because the market was continued to reject on that point before engineering the liquidity, as you can see on that specific point. Now the market came, tapped my entry point there, then the market now went to the specific direction that has to go. But also we had another confirmation entry. As you can see here, you can put your opening order on that specific point because the market has already engineered the liquidity. The market came, tapped to another second entry before continuing to its movement. Then the market now went almost to 1:100, 238 pips. The risk was only 2 pips. We are safe. Another entry was almost 4 pips, and the market rewarded almost 234 pips. So you can take advantage of the shortest movement when you actually know what you are doing. Another example, it was this one Euro JPY, where this daily time frame as a constant time frame, and you are this type 1 because the market actually closed below, the market actually above, as you can see. When we come to 1 hour time frame, you have this liquidity engineering, and the risk was only 10 pips. So sometimes you can actually leave it, because if the risk appetite is good, you don't have to go and completely refine the entry, because when you continue to refine your entries, actually you are increasing your accuracy of that specific entry, and also you are minimizing the risk. But also doing this, also you are decreasing the precision. So as a result, you may find out that you are missing your entry because the accuracy is very, very big. You want to enter a trade on that specific exact point that you need. Sometimes this is not necessary. It's better you take your trade if your risk appetite is good. As you can see, let me illustrate it clearly. As you can see, the market came, tapped that exact point, as you can see there. Then after now, the market now moves to almost 800 pips. The risk was only 10 pips. As you can see, 1:83. Enough to capitalize. Also, we have this Euro JPY. We have this type 1, as you can see, it was on 4 hours. When you come to 30 minutes time frame, we have this liquidity engineering that was refined from 5 minutes time frame. The market came, tapped that specific point, as you can see. Then the market now goes to that specific direction. The risk was almost 5 pips. And we had this reward at 316 pips, as you can see. Another example to Euro JPY number 3, where this type 1, the market was going down. As you can see, the market created a validation point on this exact point here. And this was my invalidation point, as you can see. When you come to 30 minutes time frame for refinement, this was my liquidity engineering, which was actually clean. The market came, tapped that specific entry. But also you can see another specific entry that you can take from Indomitable, which is this one, as you can see on that specific point. There, actually it was refined also, but also you can take the third entry if you observe it clearly on this exact point here. Third entry, you can take that. Then after the market can continue to go on a specific direction, almost 635 pips for the first entry, and also 626 pips for the second entry. Another example to this one, type 1 daily. As you can see, on 1 hour time frame, we have this specific criteria, we have this liquidity flip, but also we have this type 1, as you can see. Now, on some certain scenarios, the market may come and tap to this liquidity flip, so the market goes. Sometimes the market may come in, clear on that specific supply or demand, tap again, then after the market can move. But on situations like this, actually you have to mark 2 trades because sometimes the market may come and tap to this exact point, this exact liquidity flip, then offers you maybe 400 pips or 500 pips. Then the market later on, it comes now to this specific supply, taps it again, then after the market now goes to exact direction. So as you can see, the market came, and this was our supply zone, tapped that specific entry point there. Then now the market moves to a specific direction, almost 840 pips. There are a lot of examples. I can do almost 4 to 5 sessions. But if there's any question you can ask, I'll send these examples on your telegrams.
Okay.
There are examples. You can look into them. But also, assignment for this case, you can find me almost 20 examples of type 1. When I mean 20 examples, what I mean is that you have to find maybe an area of liquidity of type 1, maybe. Then after, refine that entry by finding some liquidity engineering from that exact liquidity. Then show me the entry that the market came and tapped that specific entry. Only 20 examples. And in these examples, there's something funny about these assignments on concerning type 1. Because a lot of students, after giving them this assignment, they go to my Instagram, they take my trades, then after they come and show me the exact examples.
Then you don't want to learn. No, I'm not like that.
do.
I can't do that.
So as a result, you can bring me examples from March this year. Yes, any time frame. I mean, 1 month time frame, you can take it from 1 month time frame, or 1 week time frame, or 1 day time frame, or 4 hours time frame. But minimum of them all 1 hour time frame.
Okay.
Refine it, then after you can send me so that I can check the progress and see on how you refine those entries. And if there's anything to add, I will add on that specific assignments. Then after that assignment is completely done, because others we can continue to RFQD type 2, but others we can go all in all to the phase 2. So that is how we wrap this session up. If there's any questions so far, you can ask.
Come again.
Yes, sorry.
What did you say? I did
said,
not hear you.
I said after this session,
Yes.
others we can continue on RFQD type 2.
Yes.
Those masterclass students type 2. But those students that actually are from this regular or other sessions, we can continue on phase 2. Now that we studied about those shift coordinations. But I assure you, these concepts, this type 1.
I don't hear anything, nothing. I'm not hearing you.
Can you hear me now? I don't know. Let me check my internet connection if there's anything discrepancy. Can you hear me right now? Hello? Can you hear me?
She left, sir.
Oh, she left. So what I was talking about is that actually.
Yes.
Yeah, I think everything is clear. Oh, there's any area that actually maybe it hasn't understood well. Maybe if there's any question you can ask. I'm currently sending the examples. You'll find it in your telegrams. Let me forward it to this one. I think you saw that. Let me forward it to you too. I think you saw that text on Telegram.
You mean now?
Yeah, I sent it now. You can find it on your own time. You can cross-check it. You can find me those assignments, examples. Then after, we can continue to phase 2. Of course, if there's any question, I think we will meet on the next session on phase 2. Yeah. Okay, bro. Have a nice night.
Yeah, the network is a bit bad.
The network. I think my network is. Someone tried to call me on this. That's why my internet connection was disrupted.